Good day, ladies and gentlemen. I hope you're well. So, today we're looking ahead to 2026 because this year isn't just going to be another cycle year. This year is where the macro backdrop can shift the entire playing field for crypto. Don't mind Satoshi. He's going to knock something down. 1 second. I do apologize.
Hi, everybody. Welcome to the stream. Crypto Princess and I are going to go over what's in store for 2026. So last week we did 2025 year in review, and today, 2026, Crypto Princess is back.
So we're going to be talking about quite a few things. So Jerome Powell, he's just about to leave the Fed in May this year. So what can a leadership change mean for things like rates, liquidity, and the direction of US policy? And then we're going to zoom out to see the real stress points this year, currencies around the world, the position of the US dollar, America's debt, and refinancing a huge wave that the markets will be forced to absorb. There's no way around it. And we can't ignore geopolitical tensions as well, because when the world becomes unstable, money moves. And that's why gold and silver have been ripping. They're the traditional fear indicator of the markets. The key question that we're going to be answering today is, in this world of debt rollover, political uncertainty, the rise of geopolitical risk, what does that mean for Bitcoin? What does it mean for the broader crypto market in 2026? Now, let's talk about Jerome Powell and the Fed. So Jerome Powell was sworn in as Fed chair in 2018 by Donald Trump. And when he was nominated, Donald Trump did say, we need a strong, steady leadership at the US Federal Reserve, and he will provide exactly that. He was reappointed in 2022 by Biden, who said, at these times, we need steady, tested, principal leadership at the Fed. And he said that when he was when he nominated Jerome Powell. Now, Powell saw us through the pandemic. He printed a lot of money altogether, and I'm talking about altogether, around about 7 trillion US dollars was printed in total, about 4 to 5 trillion from the Fed. Most of that went into popping up the stock market. Indeed, in March 2020, when people were lining up outside food banks, the stock market recorded its biggest week. I think it was the Dow reported its biggest week gains in 82 years, thanks to the money printing. And then obviously the markets rebound hard. Later on, the money printing, the supply shock, the energy distribution, all of that together led to inflation and the cost of living in late 2021 to around about 2023. Often, when asked about money printing, Jerome Powell replies something along the lines of, I think history would judge that we had to make a decision in real time. His term as Fed chair will be ending, if he gets there, in May 2026, so about in 5 months. Many would call him many would call his reign hawkish because the Fed hiked aggressively after COVID and it kept monetary policy tight. But he did also oversee the largest, the fastest balance sheet expansion in Fed history during the pandemic, adding trillions in a short space of time. Notably, the Fed has kept, or it did keep, interest rates higher for an extended period of time after printing all of that money, only just cutting in, I think it was October 2025. It almost seems like a given that his successor will be more dovish given political pressure. So with all of this money print, with all of the perhaps new money printing coming in 2026, where is that going to go? How much of it's going to end up in crypto? Now, Bill, there's and I forgot to introduce you, Bill. I do apologize. Sorry, it was the cat. How are you, Bill?
I'm doing well. Thanks for having me.
You're very welcome. I love having you. So there's a lot of political pressure now around the Fed chair. Now, the Fed is meant to be, we're led to be, it's independent. But what do politicians want the Fed to do? And what tools do they have to get the Fed to listen to them? Because I don't think they're going to let the Fed do what they want anymore.
Okay, that's correct. So the word is Fed independence. So politicians don't really have any power over the Fed except at the nomination process. Powell has to testify, or the Fed chairman has to testify in front of Congress twice a year. That's it. Otherwise, he's a completely independent person, which means, they can pick up the phone and say, we could use some help. Other than that, he can do what he wants. Now, what can they do to pressure him? Well, they already tried that. They already tried, with the orange man on Twitter, and that didn't work. I don't think that was ever designed to work. It was just a prelude to what they're doing now, which is to, do some sort of emerging markets thing where they accuse him of doing something that he may or may not have done in order to force him out of office. They want him out. And this has implications for markets. It's actually quite bullish. But the answer is, what can they do? Nothing. Now, the good news is what Powell has done is Powell has fallen into the trap, and he will try to defend Fed independence because the Fed hasn't done anything right in 3 years or more. And guess what? By defending Fed independence and trying to fight instead of just quit, he's going to make a big mistake, and politicians are going to have a lot more control over the Fed, which has epically bullish implications for crypto. This is just now setting in, I think.
Okay. So what charge, or why do they want him to come back? What are they actually saying? What are they accusing him of?
Okay. So the Fed submitted plans for a $2.5 billion building.
Oh, yeah.
By the standards that the U.S. government spends money, that really isn't a lot. I believe they were just trying to build a fortress. And they've accused him of inaccurately describing what the building is for and what the building's features are, implying that he essentially lied to Congress. That's a pretty serious charge. Now, I think they've had this information the entire time. This is not new. They've had it. There was a meme with the orange man appearing with Powell at a construction site. Powell had the clipboard, and orange man's going, yeah, look at that. Yeah. They've had this for a while. Now, I think it's happening because Powell refuses to cooperate with Bessent. The Treasury wants to create money. And not only is he not cutting rates at the pace that they want, but I don't think he's cooperating with Bessent. And that's why this sort of lawfare, it's called lawfare. Lawfare is being used to get Powell out. So I'm not sure if that's a full answer to the question, but that's what's happening.
So if they, obviously with the building and stuff, I think I think quite a lot of us saw as well that when they were at the construction site and Donald Trump was bringing it up, and Jerome Powell was shaking his head. It's like, no, I didn't spend that much money. That was for another building, blah, 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 blah. Are they doing it now because it's at the end of his term and they want to leave a they kind of want to bully or set the tone for what's going to happen next? If the Fed is in line, we're gonna be nice to you. If they're not, we're going to bring you up on things like this.
Okay, well, that's a great point. Yeah, they are announcing that the Fed can no longer do what it wants. And here's why, even though this administration has made many, many, many mistakes, they're actually right about this. The fact that you can have a guy or a group of people that no one knows and no one elects make these unchecked decisions that can ruin people's lives. Like, for example, this tightening cycle blew up the banks. It destroyed housing and all these interest rate sensitive sectors, car loans, created untold suffering. And all that stuff that Powell destroyed with the rate hikes were not the things that were causing inflation. So he's operating off antiquated information to the point where it's almost embarrassing. So they don't want any more of this. And of course, they want say in how interest rates get managed, and more importantly, how money gets created, because they want the Fed and the Treasury to be able to create money or print money however you like it. Now, in this particular case, it's very simple. We don't have to go into all this, we don't have to go into a whole bunch of interest rate speak. Interest rates in the United States are probably 200 basis points too high, right? We have gross domestic product. We have the economy growing 4% a year, which is a huge number, and negative job growth. Right? There was a statistic that if you submit your resume on LinkedIn, you have a 0.4% chance. That means you have less than half of 1% of a chance of getting a job if you submit it for a white collar position. It's a disaster. And they want rate cuts now because they want him out now, not May. They want him out so that they can get rate cuts now so that things may be recovering by the time they have to go to get elected. Or the election occurs in the American Parliament or the U.S. Congress. If they get him out now, they can get interest rates cut. If they have to wait for him to leave in May, it's too late for the election. Now, that said, just as a quick preview, you open up a textbook, you go, equities usually trade based on where they think earnings are going to be in 6 months. That's just how it works. Well, in crypto, people have not woken up to the fact that Powell may be out sooner rather than later. And it's obvious based on these charges, which are bizarre by any standard, that they want him out and need him out now. In other words, it's like a cry for help, because you mentioned financing the debt, and they're looking at the same numbers we are. So this is urgent. Now, even if Powell doesn't leave, this goes to the 6 months out thing. When this new guy starts cutting rates and starts printing money, it's going to be epic. If they have to wait until May, they're going to be pressing the panic button. They're going to restart QE massively. They're going to overtly restart QE. That means print huge. And they're going to cut rates. And as usual with these kind of like bizarre macro things, crypto is just now, like one day later, starting to figure it out. Like, some coins are up 40, 50%. And this along with a couple other factors could actually cause a robust crypto rally, because these hidden catalysts really can catch people off guard.
Okay, just very quickly, hello to everyone in the chat. I hope you're well. So hello, David. I hope you're well. John Legend, who's here. I hope you're well. Rob C, Shadow Chaser, Black Hat Team. I hope you're well. Oh, Mr. Alex Storyteller. I hope you're well. Crypto Dude. I hope you're well. Thank you for reposting the stream, Crypto Dude. I hope you're well. Okay, so just quickly, I'm going to put this up here as well, because we'll talk about the debt as well. Let's just have a look at money, the US dollar, and banks all around the world. So Japan's currency, the yen, has been sliding sharply. It's losing a lot of value. It's trading at around about 150 or 160 yen per US dollar, which is the weakest level it's been since May 2020, mid 2024. The US rates, the yields are so much higher than Japan. So when money flows into the dollar for better returns, the yen weakens. Markets think it's possible that there could be an early election in Japan, which could mean that there could be stimulus and more easy money policy coming along, which also weakens the yen. And then also you have the carry trade. Simply put, people borrow cheap yen, then swap it for dollars, and they earn higher interest elsewhere. And that's causing pressure and that's pulling the yen down. We have Iran as well. Before we come to the United States, we have Iran as well. Iran's rial is in serious trouble. The currency is in serious trouble. It hasn't collapsed as in it's collapsed overnight, but its purchasing power has gone down significantly. So we're looking at fresh new lows of around about 1.4 million real for $1. Inflation is extremely high. I think it was last month in December, inflation was up something like 40%. So it hasn't collapsed. The currency hasn't collapsed as it would overnight, but it's collapsed when it comes to practical terms. Very low buying power, but very high inflation. Fun fact, Iran, and those people who watch this channel know, Iran's been mining Bitcoin since 2018 or 2019. So it does have a lot of Bitcoin already mined. Now, all the mined Bitcoin can only be sold to the government. Now, the Fed is currently printing for regional banks to avoid smaller banks from collapsing. Not only that, as you can see in this chart, it has a refinancing debt of around 11 trillion US dollars to refinance in 2026. Now, depending on how you measure that and what numbers are included, nevertheless, it's one of the largest refinancing waves in history in dollar terms. Roughly 9 trillion odd of that is from the treasury rollovers. Much of it is tied to the era around the pandemic and after the pandemic. Now, on top of that, the Fed has been supplying liquidity to the banks and funding systems to move smoothly, but it's not really been paying off the debt. I don't think anyone seriously thinks that America is going to pay back all of its debt like a household would. America instead is maintaining its debt, is maintaining its confidence, is resurfacing its interest and rolling over its debt, which is completely fine. Nothing's going to break like that until it gets to a certain point. Now, no fiat currency has held its purchasing power forever, and that's in the history, for all history, that's never happened. How uncertain are investors about the dollar right now, considering all of this refinancing that's coming on, considering what's going on with other currencies in the world? And what would we actually see in the markets if confidence in the dollar was to crack?
Okay, these are all good questions. So when it comes to our debt, we have two solutions. One is to get stable coins to a $4 trillion market cap so that the stablecoin companies will buy treasury bonds in order to back their stablecoins. That's why the US is in such a hurry. That's why they got that act passed. Solution number one, stablecoins. Solution number two to the debt, get rid of Powell, cut rates to create demand for bonds. because a Federal Reserve chairman he can do an easing cycle. He can cut rates. He can go on the tape and talk dovish. He's got to do something to create demand for our debt. And of course, we discussed this last week. If assets minus liabilities equals equity, and the U.S. has 38 trillion in liabilities that, as you said, they cannot pay back, how do they fix the balance sheet?
Mhm.
Well, you increase assets. How does a country increase assets? Well, they just take over other countries. So Orange Man did Venezuela. He's doing Cuba next. He's talking about doing Greenland. I think that's going to be a merger. Okay. Cuba, they can take by force if they want to.
Mm.
They're going to, and then they're going to merge with Canada too. I mean, not today, but that's their idea. And Trump's a real estate guy. He's like, okay, well, what do we need to do? Get more real estate. Yeah, and I know nobody wants to hear this, but we are acting like the Roman Empire, but people are not figuring this for this. It's because of the 38 trillion in debt. It's because of assets minus liabilities equals equity. Now, for the Iranians, a couple points. One, you cannot have the mass movement in the streets without that being organized by intelligence services. I mean, essentially, our intelligence services have been expert at overthrowing governments since the 60s. And they've undoubtedly got help from Middle Eastern allies, basically to get all the Iranians out into the street, venting their rage because, intelligence services have been attacking their infrastructure. They've been sabotaging. Nothing in Iran has worked. Social services, electricity, internet. Like, this is the war you don't hear about. And, a certain country in the Middle East has lost all popularity. Public opinion over here is so negative about this one particular country that they could not militarily attack Iran and kind of destroy the place. They couldn't attack it at all. Not before a midterm election. Because, that's backed by us. If they do something like that, they can't do it. So they're doing what they're doing now. Simple. And then guess what's going to happen? We're going to get, when there's a new Iranian government, two things are going to happen. One thing is their currency is going to rally massively, like the Venezuelan stock market did. So their currency will rally massively and they will get a US aid package. And guess where all that Iranian Bitcoin is going? Just like the Venezuelan Bitcoin. Oh, that's going to be the strategic Bitcoin reserve. So not only are we taking your country or overthrowing your country, we're taking your Bitcoin too. And that Bitcoin is never going back on the market. Again, I brought this up last time about Venezuela. That 600,000 Bitcoin, that is never getting sold ever. That'll be used to back our debt one day.
And they have a huge amount. But what they don't realize, some people don't realize, is why do they start mining Bitcoin? The reason was because America first came in back in 2016, 17, or whenever, and they sanctioned them. They sanctioned Iran. And when they sanctioned Iran had to look at itself and what resources it had. It's actually got a lot of natural gas and all the rest of it. And what they decided to do was they decided to mine Bitcoin so they can get out of the system. Not only did they decide to mine Bitcoin, what they decided to do was anyone else who was mining inside of Iran, they had to sell their Bitcoin to the government. They had to do it. They couldn't sell it anywhere else. Now, up until very, very recently, I think they did one transaction recently, last year or something, or just in the last few years, they did one transaction. Other than that, they have never sold the Bitcoin that they've mined or that they've bought from the people who have been mining Bitcoin in Iran. And that's because they can't. They've actually put it down into law that they're not going to sell this Bitcoin. Just to know how much Bitcoin they have, in the 2021 bull run, Iran had 5% of the total mining power when it came to Bitcoin. So they've got a huge amount of Bitcoin. Lots and lots of Bitcoin. But this is the thing, that country, the reason why it doesn't have infrastructure, the reason why it doesn't have all of these things that people want is because it's been sanctioned. So your country can't give you that. And then you're going to the people who are sanctioned you to, for that. Anyway, we are going to get more into politics now. Let's talk about what's happening in the world, because this directly affects our bull run. This directly affects crypto, affects Bitcoin. It reflects everything, affects everything. So Israel has been committing a genocide with the support of America in Gaza. It's also recently bombed most of its neighbors: Lebanon, Syria, Yemen, Iraq, Qatar. From what I know, God knows it's probably bombed more as well. I don't really watch the news. The US is causing problems all over the world. The illusion that the US was Superman, he was our savior, is now gone, if that makes sense, for most people. It's bombed multiple countries last year. And so far in 2026, 12 days into 2026, it's bombed Syria and Nigeria. It's threatened Cuba. It's threatened Mexico. It's threatened Colombia. It says it's got plans to annex Greenland or put people on the ground in Greenland. I'm not entirely sure what it's going to do with Greenland because, well, actually, you don't know, because they did steal someone else's. They did steal or kidnap the Venezuelan president. Obviously, you've got you've got the possible military intervention in Iran as well. And I'm probably missing out a trillion other things. I don't really watch the news. I find it too distressing now. It's like the whole world is on fire. You've still got Russia and Ukraine. That started in the early part of 2022. That's still going strong. You still got China and Taiwan tension. They've recently been doing major drills around Taiwan. It's adding more pressure. You've got the RSF, which is actually backed by the UAE, and that's committing a genocide in Sudan. You got Manwar, I can never say it, Myanmar, that's it, Myanmar, and that's committing a genocide. And I think it's been doing that for a good couple of years as well. There's so much tensions in that part of the world as well. More than that, and this really affects the markets a lot, is that you've got a lot of tension in between world leaders as well. They're telling each other what to do, when to do it, how to do it. They're bullying each other. One saying do this, the other one's like, no, we're not. You better do that. They're acting like 2-year-olds, quite frankly. They're not acting as world leaders. They're not acting as responsible. We should be holding our world leaders to a higher standard. So you've got all of this. It does not help the bull run in crypto. For normally what we've seen is the bull run, for a crypto bull run, you need money to rotate from safe assets and safe havens into speculative assets like Bitcoin. We haven't seen that, and it just seems like at 12 days into 2026, things are getting worse, not getting better.
Okay, well, let's start with the dollar. Most of the time, the only way out of a debt crisis is to devalue the currency, assuming you don't have the option to take over other countries. Even if you do, the only way out of a debt crisis is to devalue the currency. Well, here's the problem. The yen is precipitously falling because the Bank of Japan is just like, let the bond market and the currency collapse. Let the market figure it out. We're not going to fight it, that's dangerous.
Mm-hmm.
That creates a flow of funds into the US dollar, right? We can say all the negative things about the dollar that we want. You go overseas, you go to certain countries, it's king dollar, right? They want the dollar. Now, when you look at all this unrest all over the world, it creates what I call the excuse trade. So let's say Christians are getting killed in a particular nation in Africa.
Mm-hmm.
Well, Donald Trump can pander to the Republican base by getting on the tape and saying, we're not going to tolerate this. We're not going to tolerate, mass imprisonment or mass killing of Christians. We're going to go in and we're going to intervene with our military. Now, that by itself is like, okay, that's nice, depending on what religion you are. However, what it really is justifying this mass action everywhere. Like the Greenland talk, which is everywhere, is really a distraction from probably what we're literally taking out of Venezuela, which is going to be their oil tankers, and silver to begin with, Bitcoin as well. So in intelligence, you follow a simple motto: nothing is what it seems. So if the world is on fire, the orange man's going to sit back and go, oh, excellent. We're going to take everything we want. And this is serious, we're going to prevent the Chinese and the Russians from getting it. We take Venezuela's oil and we flood the market with it. Okay, the Russians are going to have a problem because their whole economy, their whole war industry is funded by oil. So if oil goes to $30, we're perfectly happy with that. Our energy companies won't be, but we'll survive. They won't. So if we want the Ukraine thing to stop, we'll just push oil down to $30. They'll come to the table. And of course, the thing with the Chinese, the rivalry with the Chinese is epic. But I think Trump's attitude is, well, if you want to go into Ukraine and you want to go into Taiwan, okay. Okay. It's not funny, but we're going to go do the same thing. We're going to just, we're going to have a 51st state. We're going to go from 50 states to 55 states. Thank you for shopping at the United States. Now, again, how does this affect the dollar? I think we're watching centralized entities fail. Ask anybody in Iran how centralized services are going. Like when they call 911 or their version of 911, like, did they get service? Are the cops or the ambulance is coming? The hospitals are overwhelmed. In other words, they have no infrastructure. Everything centralized has failed. So what do we got? Japanese government, Bank of Japan, done. Federal Reserve, clown show. Next is the legacy futures contracts when silver, which is the way they're devaluing the dollar now, when there's a failure to deliver physical silver to someone who wants it. Centralized structures are failing, whether it's governments, whether it's all this geopolitical unrest, central banks. And if they can't take the dollar lower versus the euro and the yen, well, guess what? They're going to take the dollar lower versus metals. And hey, here's the good news. They're going to take the dollar lower versus Bitcoin. That's when Bitcoin goes up, the dollar depreciates. And the amount of dollar depreciation that needs to occur, your graph, right? Like that big bar of what we need to borrow. Yeah, just flip it this way. And that's what Bitcoin's going to look like. Because, it's all going to happen. It's happening right now because people are caught off guard. Like they're like, why is Dash up 54%? Why is Decred up? What's Decred? Why is Monero moving? Why did Zcash move last year? It's simple. They're just forms of money, right? That's it. So you have dollar, euro, yen, sterling, Swiss franc. Now you have Bitcoin, Ethereum, Solana, Zcash, and Monero or XRP. You know what I'm saying? Like there's, you go to the airport. How many major currencies are there? 7, 8? We're going to have 7 or 8 cryptocurrencies, right? That's what crypto comes from. Cryptocurrencies. You're developing a cryptocurrency market. And to say that a dollar devaluation, can you imagine if a dollar devaluation occurs in privacy coins? Right now, privacy coin market cap is about 20 billion. One investment bank thinks it's going to 100 billion. So what happens to the dollar? Well, it gets vaporized. Well, versus what? Well, versus precious metals. And then crypto's got to be next. With massive interest rates coming and centralized structures failing, This is like Satoshi's dream. You know, that's why your cat's climbing up on the desk, because it's trying to find the buy button. Where's the buy button on this keyboard? Where's the green button? Just hit it.
Okay, let's talk about gold and silver now. So gold and silver tend to do well when people feel the system is shaky. Wars, sanctions, political shocks, and currencies losing value all push investors towards hard assets that don't depend on the government. So there's a simple logic to this. Geopolitical risk, debt, everything that we've just been talking about, people fly to safety. So when war risk rises, investors reduce exposure to a single or to a riskier asset and move it to things they trust, that would be worth something tomorrow. And gold is the classic safe haven. Silver rides a second wave. Currency problems, exactly. People want to an asset which is outside of the currency. If the currency is falling, or if you have inflation is too high, holding cash becomes painful. So again, people are going to go to gold and silver because they're priced globally. They can protect purchasing power better than weakened local currency. Rate cuts, that's something else that we're expecting to happen in 2026. That helps metals or precious metals. So gold doesn't pay interest. So when markets expect lower rates, lower interest rates, there's a fall in real yields, and the opportunity cost of holding gold drops, making it more attractive. Central banks buys gold. That adds to the bid for gold, the constant bid for gold. Many central banks have been accumulating gold recently to diversify away from reliance on any single reserve currency. And that supply or that demand is priced over time. Silver has an extra element to it because it's also used for the industry. It's also used in industry. Silver isn't just a fear indicator or fear safe haven, if that makes sense. It's used heavily in things like electronics, solar, etc., in bombs as well. It has strong industrial demand that tightens the supply, and it does make silver more aggressive than gold, especially in the last couple of months. So all of this mixed in together is exactly why why markets have been pointing to gold and silver, and why they've been hitting fresh record highs. Moving into 2026, it does look like gold and silver will continue to make new all-time highs for some time. Currently, the market cap of gold is something around 32 trillion. It's trading over 4,500, maybe 4,600 US dollars at the moment. Silver, on the other hand, the market cap is over 4 million, just 4 trillion, sorry, 4 trillion, under 5 trillion. It's under 5 trillion, and it's currently trading in the mid 80s, maybe 85 US dollars, something similar to that. Now, just for comparison, Bitcoin's market cap is only 1.8 trillion. So Bitcoin has a huge way that it can go. A lot more money can come into Bitcoin. Bitcoin's market cap is actually really small compared to gold and silver. Now, with Bitcoin, you have the 4-year cycle. Everybody knows about it. Whether or not it's broken, we'll know in hindsight. But you have the bear market, you have the recovery year, then you have the halving year. The halving is the only solid structure in the Bitcoin cycle. You have the halving year, and then you have the parabolic bull run year, which then means you have the bear market. And it goes on like this. Now, how high? We can go very high. We can have for gold and silver, we can have multiple bull run years. Now, both of them have been in sideways action for about 13 to 14 odd years. Gold, for example, was in sideways action until 2023. and silver until last year in 2024, 2025. Now, and I'm talking about these mega bull run years that last 8 years, or they last, more than that. In fact, I'll show you just quickly right here, because we can go a lot longer with okay, so this is silver. Let me just quickly do gold first. Okay, gold. And for those people who are on my channel or see my channel regularly, they will know in 2004 gold got its ETF. Gold got its ETF, and it kind of literally just went right the way up on this mega bull run to 2011 there. And then since then, obviously, it dropped down a bit, and it's just had sideways action, lots and lots of sideways action for about 13 odd years to 2023. And then it's just gone parabolic again. And then here we go. We've got silver here as well. And this is why, this is the the ETF. Silver got its ETF in 2006 here, round about here. It went straight up. It had a massive pullback in 2008. And even in that same year, 2008, it recovered and it went on a massive bull run. The bull run continued to 2011. It then dipped down into a bear market. We've had lots and lots of sideways action, a huge amount of sideways action. And then come 2024-ish, and 2025, we've just gone parabolic. Towards the end of 2025, we just went absolutely crazy. It's been going up. So these mega bull runs do last a long time in gold and silver. It's not like the 4-year cycle. It's not like they're going to be over tomorrow. What do you think is going to happen in 2026? Do you think we're going to see a mega cycle? Do you think all of this is going to continue and contribute to another bull run, mega bull run? Because I know they've had little bits in between as well for gold and silver. And then most importantly, what's going to happen after that? Where is the money going to rotate from gold and silver? Is it going to go to another speculative, or is it going to go to Bitcoin and crypto?
Okay, so let's start with that. Why are metals moving the way they are? Because the entire fiat foreign exchange market is frozen. Like, nobody wants to buy the dollar, but nobody wants to sell the dollar for the yen, the euro, or sterling. So what do you do when you have to devalue all of the fiat currencies? Simple. You have to buy other assets like silver and gold. Now, just to tell you how big the fiat currency market is, volume in the fiat currency market is $7.5 trillion a day. So this is obviously a massive amount of capital that if they need to find a home or they want to invest in a currency, well, that new currency right now is metals. Again, $7.5 trillion a day. That's a huge market. That capital they are devaluing the dollar through metals. Now, on a geopolitical basis, the Chinese and the Russians, they push back against us because their governments have massive amounts of these metals on their balance sheet to back their currencies. And we have futures exchanges that will not be able to deliver physical silver if there's enough pressure. So there's that. And then there's industrial demand and the data center build out. And then there's that. So can that persist? Sure. Most likely what's going to happen, if you look at the history of commodities, crypto's only been around for 12, 17 years. Prior to crypto, the wild volatility of the crypto of legacy was commodity futures. And when you would have a drought, soybeans would, smoke higher. Or, if you had oil in 2004, when China was growing at 10% per year, oil went from $50 a barrel to $150 a barrel. So these kind of parabolics throughout the history of commodities, they're common. They usually go way farther than you think. So everyone now thinks silver is going to 100. That's consensus. People on TikTok think that. So silver is probably going to go to 125. That's the level where companies are forced to switch to copper. And then it'll probably go beyond 125 because that is actually a demand destruction level. That's where people go, well, I'm just not buying silver. Just going to go without. Can't afford it. And that's when the top happens. Now, in no way, shape, or form do I think crypto has to wait for those markets to top out before crypto can go up. I think if those markets do top, once that happens, the move into crypto can be even bigger. So it's like, crypto can do gradually. And then if the trade switches from metals, it'll be suddenly. I think things like silver and gold are just resetting themselves at much higher prices after a 15-year base. There's a saying, the bigger the base, the higher in the space. The longer something sits still, the bigger the up move. So you sit still for 15 years, that move's not going to be over in 3 months. It might not even be over in 2 years. So it's a mega trend. And, great. Again, centralized structures are failing. Or if they don't have to fail, you can just have centralized structures losing credibility. Like gold and silver are the old school way of reflecting that. Oh, but there's nothing like the new school way, right? Nothing moves faster than crypto. And they got a lot of devaluing to do based on this price action. So can metals continue to go up? Sure. I mean, if you look at the US dollar versus the yen, if you want to get into weeds, right now, $1 US buys about 158 yen. That level at 160, it doesn't sound like it, but that's a big deal. Like, you could have a disturbance. People could really freak out. That might cause a stock market problem, whatever. But all of this is coming our way. It's just a question of when. And in crypto, as in gold and silver, the money isn't made in the buying and the selling. The money is made in the waiting. One of Warren Buffett's guys used to say that. And that's true. Most famous hedge fund guy ever, Stan Druckenmiller, said, they would work. They would set the positions. They would go to work, read, and wait. The money is made in the waiting. People think because it's not going up that it's not going to go up. No. Not with silver in this Powell thing. Oh, no. So
and it kind of feels like people have just rediscovered silver as well.
Right.
Yeah. Okay, awesome. No, that's brilliant. Everyone, Bill, all of his details are in the description. So do give him a follow. Just very quickly, I've got another crypto story coming out today. This live stream should redirect there. If it doesn't, just go onto the Crypto Princess channel. It'll be under videos. So hopefully we'll see you all there. There we go. And we'll be back next Tuesday with Formation, and we're going to be doing something about capital. We're going to be talking about capital rotation. That's brilliant. Thank you so much for being with us today, Bill. Really enjoyed this stream.
I enjoyed it. Thank you.
Okay, guys, I'll see you all on the